The rupee has been falling dramatically against the dollar in recent months.
Institutional investors, overseas investors have pulled out well over 1,32,000 crore from the Indian market.
As lockdowns in China and the Ukraine war and fear of higher interest rates sent a nervous jolt through the markets.
Hello everyone, welcome to Topic of the Day. In today's video, we shall be discussing about the depreciation of rupee. Now recently, with rupee touching the 83.02 against the US dollar in October 2022, the Indian currency has fallen nearly 12% in this calendar year. According to the projections of the International Monetary Fund, the currency exchange rate is going to depreciate further to rupees 94 per dollar. Now let us talk about what is the rupee exchange rate. The rupee's exchange rate vis-a-vis the dollar is essentially the number of rupees one needs to buy $1. This is an important metric to buy not just US goods but also other goods and services, trade in which happens in the US dollars. Let us discuss about the major reasons for depreciation of rupee. First, post-COVID-19, the world economies were using many tools to revive their economy, be it increased money supply, tapering, etc. Adoption of such growth tools is creating some uninvited effects like inflation, depreciation. The pressure on the rupee is primarily on account of broad dollar strength as investors turn risk-averse with growing uncertainty related to the Russia-Ukraine war. There is uncertainty created by factors like the US economic slowdown, which enforces investors to park their assets in the safe havens. Now, according to that, the US Federal Reserve's tapering is attracting investors to move their assets out from low-yielding nations back to the US. All this resulted in the outflow of portfolio investments from India. Now, the Russia-Ukraine war is leading to a rise in oil prices. India is one of the largest importers of crude oil, importing about 80% of its oil from outside. Hence, it needs to pay more import expenditures, which ultimately leads to an increase in the supply of rupee in the market and results into depreciation. Now let us talk about the benefits of depreciation. Depreciation of the currency is not bad all the time. Sometimes countries need their currency to depreciate in order to curb the balance of payments disequilibrium. A depreciated rupee can benefit the Indian economy by boosting exports, which account for 18.7% of India's GDP. Now let us talk about the negative impacts on Indian economy. In the current scenario of depressed global demand, a depreciated rupee is unlikely to benefit the country. Besides, the benefits, if acquired via exports, will be much lower than the losses which India will have to face in the form of higher import prices. The weakening rupee will add to the import bill. Further on, due to depreciation, India's trade deficit is rising tremendously to a record high of $26.1 billion and is expected to be $105 billion by the end of this fiscal year, which equals to 3% of its GDP. The surge in inflation in developed economies like the US and the UK will have increased the prospects of policy rate hikes in these countries. This could put further downward pressure on the rupee and increase the imported price inflation. Now let us talk about the impact on forex reserves. First of all, efforts in the form of a tight monetary policy, rise in interest rates, and the use of forex reserves are being made by the Reserve Bank of India to pull Indian economy out of this situation. In this process, India's forex reserves have depleted by $109.58 billion in the last 13 months. In the week ended October 7, 2022, the country's foreign exchange reserves stood at $532.868 billion. As per the recent RBI data, it had touched an all-time high of $642.543 billion in the week ended September 3, 2021. So this was a little bit about the topic. Now let us take up one practice question on the same. Consider the following statements relating to Indian economy. First, with rupee touching the 83.02 against US dollar in October 2022, the Indian currency has fallen nearly 12% in this calendar year. Second, in this process, India's forex reserves have increased by $109.58 billion in the last 13 months. Now, which of the statements given above are correct? You can take a moment and write your answers in the comment section below. Now, both the statements are factual, but only the first statement is correct. The second statement is wrong. Therefore, the correct answer is option A, that is 1 only. And with this, we call it a wrap of today's edition of Topic of the Day. I hope you liked the video. I will see you with some other topic tomorrow. Till then, take care and do stay tuned.